All right, week 12 outlook number two, beginning with the British pound futures. We've got a little bit more price action than what I was expecting. So I had explained in the last outlook what I was looking for. I was definitely not expecting price to take this high, but it is one of the actions that occurs, and in hindsight, it does make sense. These did make sense in the moment in which I did get responses from the area of interest that I was looking at, but ultimately they were not strong enough, and so price decided to run to its desired objective based off of this bullish price action once taking this low. So ended up taking a couple losses there, which is totally fine. I honestly I wouldn't do anything differently other than probably not taking a trade once price passed the threshold of this area of interest here, which is at the high of this purple candle, or not the high, but the high of the body of this purple candle. And then price ran, gave us the draw on liquidity, which I was able to, realize that was what was happening in the moment. And then once price did that, I was able to capture an opportunity here based off of my entry model that I would use. And so this, what you're seeing right now, is actually where I entered. It was off of a 1 hour price gap, and I'm not going to go into detail, but this is what the trade is looking like as of right now. This is just, for show on where the immediate target is, but obviously I told you guys what my overall target is, or what my overall targets are, and then what the next structural point target is, which is all the way down here. So it's really like a 15 to 1. But as of right now, if it's just taking to the immediate low, it's a 6.2, 6 to 1. All right, so yeah, all in all, we just get a continuation of bearish price action as I was expecting, but we had a structural action that I was not expecting occur. I was expecting the action of mitigation to give us the full response. It did give us a slight response, but it failed. We actually ended up taking this high, and now you're seeing the action that we have here. We filled this price gap completely. We filled all of the inefficient pricing on this side completely. This entire price leg is completely mitigated, which in the last video I explained why I don't see price, taking anything higher, because all of this is mitigated during this price run. So the only thing that was left unmitigated was this price, which was this area of interest here. And then if it were to break it, we would have to have the structural action, which is in hindsight what I'm saying right now is that we would take out this high here, and that's exactly what happened. And then I was able to capture a very beautiful position based off of uh, that structural action. All right, so continuing, we're looking for clearing of this low here, so I'll mark it out here. So we're looking for immediate clear of the price leg, and then afterwards we're looking for free fall towards those other structural points. So the other thing is, if you look at it from this standpoint, from the price leg, the reason why I call it a price leg is look at this. Not only if I would have marked it out completely, I would have realized that I was on the incorrect side of the price leg. This right here, this action of taking this high is actually what solidifies the price leg in the first place. So I really was just incorrect in taking this. It was more of a intuitive, like, yeah, we're going to get a response. But if I applied it to the structural analysis of this price, or this price run, of this price action, I would have, you know, easily seen that I was on the wrong side of the market, and that this would have failed because it was on the discount side of a price leg. And if I was looking for a solidification of the price leg at this time, I would have seen that, oh, this is the last high, essentially, of this bearish run that took out this leg. And so price actually, if it is going to come back, it's going to have to take out that high. So that was just a boneheaded mistake on my part for not doing the full analysis to understand that, hey, price is generating a price leg. We have the run, we have the structural point, we have the liquidity point. Now we're looking for solidification of the price leg. And because all of this is already mitigated on the premium side, the only thing that would generate the price action to go lower would be post solidification of the price leg, which is the pullback to take out this high. And then once we take out that high, that's when we get the draw on liquidity. And once we get the draw on liquidity, that gives us the options to take opportunities to go lower, and that's what we're getting right now. So that's just a little bit more of the logic. Gotta do the full analysis, can't half-ass it when you're doing this kind of stuff. All right, so we can clear out all of this price action. We know what's happening here. We know we got the breaker structure. So this is what the price leg is looking like as of right now. We're looking for continuation to take out the price leg and then continue lower. And then we would look for a continuation of the price run. But we already have our opportunity. We already have our entry. So we should be immediately looking for targeting this low. All right, moving on to gold. GC. All right. So, like I said before, it wasn't absolutely certain that, or absolutely necessary that we pull back into the area of interest that I was looking for, or any area of interest for that matter. It's just a matter of going forward, looking to take out or move into the discount and premium side. Like I said, gold is ranging right now. And as you can see, we are doing exactly as I stated in the previous outlook, is we're targeting we're moving towards equilibrium and moving towards the discount side of the range, in which we've already taken out this immediate liquidity point here, and now we're looking to target this liquidity point here. And as we cross into the discount side, crossing the equilibrium threshold, you'll start seeing a little bit more sensitivity around this area, because every time we are inside of a range, this is probably the 50% area is the most sensitive, and really like 50%, 10% higher, 10% lower, just qualitatively looking and trying to quantify how sensitive it is. The high sensitivity region is basically like 5 to 10% higher into the premium, 5 to 10% lower into the discount, or like the really sensitive areas in which you'll get like very, strong, jagged rejections on both sides. That's just something to look at, just something I've noticed, observed when looking at these pairs. All right, so gold, like I said, we're just ranging, moving into the discount side. Trade if you want, trade if you don't. It's up to you. All right, on to the NASDAQ. So this is one of the pairs I was expecting for price to continue lower based off of this draw in liquidity, but we failed to do that. We actually decided to move higher. And not only do we move higher, we moved higher to take out another liquidity point. But really, what I see it as is, as of right now, I just see it as, if I'm looking at this, just random price action. But if I'm looking at the highs and lows, as I should be, yeah, it effectively was another draw on liquidity, where we just ran a little bit higher. We created a new high. We gave this draw on liquidity. It failed. And so price, you can see that it pulled back to mitigate this area of interest here, which is basically a price gap. And then we pushed higher. That led to the take on that high. And then we ran one high, another high yet again. And we took that high. And then it gave the move here. If we were looking to continue higher, we would have responded based off mitigation of here. We can see we had a little bit of sensitivity based off the wicks, and then the price just full on just failed. And so we are still holding the bias that we are bearish. We should be looking to continue lower to take out this low, and then ultimately this low as we continue moving lower here. And that's just pretty much what we're looking at right now on the NASDAQ. And then once we break this low, that's when we start looking for a price to, move lower. But it was a little bit tricky. I did get caught up in based off of this draw on liquidity. I was not expecting this price action. There was nothing leading me to believe that price would continue going higher to take out this high. So I just chalk it up to inaccuracy in the analysis. But as of right now, you can see that clearly we are extremely bearish. We just needed a deeper liquidity pool to trigger much more potent sell orders for us to continue the price action lower. So I would not be surprised moving into Thursday, Friday if we take out this low here. I might look for opportunities inside of this, but I'll need to see some more price action post break, or I guess during this breaker structure or post breaker structure of this low here. All right, on to the Dow Jones. Yep, I mean, same. It's literally the same thing. We just drew liquidity, drew another high here, and then we rolled over. We're actually looking to target the low of the range, which is very apparent. As I stated, we would take out this low. We actually did take out that low, and now we're looking for the low of the range. There's nothing left stopping this. So once again, understanding how the mitigations and the balancing of the ranges go, and understanding what price is always looking for targets as those liquidity points and structural points, we're definitely going to take out the structural point. There's nothing stopping this now. We're about to break out of this range, and after we break out the range, this thing is going to free fall. 100% this thing is going to free fall. And where is it going to free fall to? Well, I leave that as exercise to the viewer. All right. And then moving on, I believe that's everything. So yes, just continuation of price action. I really, really, really implore you guys to start paying attention to the mitigations. And I've brought it up multiple times now. If you've watched the videos, go back and watch them. It's been 12 weeks. Is it 12 weeks? Are we 12 weeks in already? Yeah, 12 weeks into the year already. And I've pretty much detailed exactly how I analyze the markets. I have not gone over my models for entry because that's not what this is about. This is about the outlooks and how to understand price action and easily find where you are in the markets. I've detailed that out pretty much all the way. I've given you the actions. I've given you the structure, the market structure of what we need to look for. I've shown you the moves and how to analyze them and where to pick your targets. And now it's just a matter of continuing that understanding and continuing that analysis procedure to frame up high quality trade ideas. All right. So I'm going to continue with the outlooks, right? We got, what is it, 50, 40 more outlooks to go effectively, or we got 40 more weeks to go, I should say. So we got more outlooks to go going from there. And yeah, it's just going to be let's continue on hitting these markets hard. Lots of opportunities, lots of volatility. This is what we love to see. All right, peace.